Welcome to your home with Team Gale at Coldwell Banker Seacoast Advantage, the show for buyers, sellers, owners, and investors. We're here to give sage real estate advice and take your calls regarding buying, selling, and owning your home. Brought to you by Alpha Mortgage.
Good morning, everybody that's listening in. Thank you for tuning in to us. This is Jack Gale with Team Gale at Coldwell Banker Seacoast Advantage. In the studio this morning with me is Tom Gale, also with Team Gale, and a special guest is Cameron Pearson with Alpha Mortgage, and we're also sponsored by Alpha Mortgage. Hello, gentlemen. How's everybody this morning?
Good morning. Good morning.
Good morning.
One of the things that we wanted to do today is kind of catch everybody up. We, on a regular basis, try to have people in that are of interest to the general public about anything to do with real estate, buying, selling, staging homes, surveys, and so forth. And we've got Cameron in here to talk this morning about mortgages. And I just wanted to give everybody kind of a rough idea of where we are, with the industry and with mortgages, because the rates are starting to tick up a little bit, aren't they, Cameron?
Oh, yeah. That's definitely the hot topic right now, because interest rates have jumped considerably since pretty much middle of May is when they really started to see the increase and have pretty much had the largest increase since 1936 in the amount of time that it has done so. But the good news is interest rates are still incredibly low.
Yeah. I mean, that's the good thing for buyers. I mean, and it's across the board that the interest rates are still low, whether it's VA, USDA, or whatever. What about like a 30-year fix, which is what most people kind of look for?
Right. In the conventional world right now, we're seeing the 30-year fix coming in that 4.625 to 4.875 range, which, like we said, still really low. But once you've seen the threes, it seems like a shock to hear a four.
Yeah. And for those that don't remember, years and years ago, my wife and I bought a home down in Texas a number of years back, and the interest rates, we felt very lucky to get one at 10%.
Exactly.
So, at the rate that there are now, we're in great shape.
Yes, it's still a great time to purchase, a great time to get 30-year fixed money. It's just, what we've been waiting for, the great side of the rates going up means the economy's getting stronger. I mean, it's a direct derivative of what's happening in the economy that makes the rates move either up or down. And so the good news on this side is that the economy is strengthening enough, people's confidence is up enough that the bond rates are having to attract by raising. So, I mean, that's really what we want to see. So, I mean, you've got two sides to every coin, and this one means that we are strengthening, the real estate market strengthening, everything looking better, home sales up. So we'll take the higher rates with the stronger economy for sure. What
about, can you give the folks out there that are listening in this morning, kind of a thumbnail sketch or say what a 30-year fix would be, maybe on pick a value, 100,000, 150,000, I mean, something that you feel, kind of good enough to throw spaghetti at the wall and see if it sticks.
Well, yeah, if we were looking at just, let's say, I've got some numbers here on a $190,000 loan. When you say numbers-wise, if, for example, the 4.75 current rate right now, let's just say total monthly payment with taxes, insurance, mortgage insurance, and everything would be right around the $1,300 for a $190,000 loan. So it's still very attractive. The other side of that, though, is as the rates continue to go up, for example, if we use that same scenario, $190,000 and add a point to the rate, 5.75. In that scenario, we've gained another $100 a month in payment. So as you can see, as the rates move, your buying power is reduced, which is why it is such a great time to buy still.
Yeah, especially for the people that are, going into an apartment or looking at apartments and contemplating staying there. I mean, with basically the cost of money to buy a house now makes perfect sense because the rates are still good. You can get it for a lot less than you would be, spending for an apartment rental.
Exactly. Yeah, the rates are still it's funny that you hear people saying, getting surprised with a 4.5% interest rate. But then once you still see the numbers, once they come out and you notice the size house you can buy versus the size house you can rent, we're still well ahead.
Absolutely. We had talked a while ago, Cameron and I, we're going to be working on a new home subdivision. And the price point for that new home subdivision is going to be around $140. Mm-hmm. And, what would something like that be on a 30-year?
In the 140 range, we'll probably be right around the $1,000 a month mark all in for a 30-year fixed. maybe just under.
And what Cameron and I were talking about, this house plan, or the house plans that we're looking at, are somewhere in a range of about 1,200 to 1,400 square foot. So for $1,000 a month to be all in, mortgage, taxes, insurance, principal, and interest for $1,000 a month, that's pretty good. I mean, when you think about your apartment generally is about 900 to 1,000, 1,100 square feet. So you're getting a lot more value. Plus, you're going to get a garage with these. So that's something for everybody that's out in the listening audience to think about. Right. If you have any questions for Cameron or for us here in the studio, you can reach us at 332-6390. That's 332-6390. We love to hear from everybody, so please give us a call.
Well, and one thing that I was going to mention, too, is if I just ran the numbers for a $200,000 house, if you got an interest rate, 6 months ago, maybe at 3.75, you were looking at $926 a month. Same $200,000 house now at 4.75 would be $1043 a month. So over $100 more a month. That's just going towards the interest. So yes, if you're one of those people that purchased 6 months ago, congratulations. If you're one of the people that hasn't yet, but you've been thinking on it, that's your buying power. Is kind of eroding. You're going to be spending, more money on interest and less money on home. Certainly I hope that the jump that we've seen recently is not going to be something that continues on its current path. But I do think that the general consensus is that over time it will continue to go only in the up direction. So right now, if you've been kind of thinking about it, now is a good time to do it. And one other thing too is I have somebody that was pre-approved several months ago, and they got a quote from Cameron or whomever or whatever. And if you haven't been in touch with your mortgage person recently and you've kind of been, thinking about homes, whatever, you may want to go back and touch base with your lender to kind of see exactly what the new rates are and figure out, what price home you should be looking at. Because one other thing that I don't want to do is have somebody going, as actually just happened to me a couple of weeks ago, that we were looking at $170,000 homes because that's what they had been pre-approved for, and then all of a sudden their buying power was eroded, so we had to cut it back to like 150s.
And if somebody wanted to get up with the folks at Alpha Mortgage, how can they do that?
Oh, you can reach me anytime at 910-256-8999. You just have to ask for Cameron Pearson.
Okay, good deal. But yeah, anyway, and talking about houses and market, one of the things that we're seeing in the market here in the Wilmington area, if you're listening, whether it's Wilmington, Brunswick, Pender, or Onslow County or Duplin counties, what we're seeing is that the inventory levels have gone down. As for instance, a year ago. April, we had over 3,300 homes available for sale, and right now we're sitting at about 2,400. So we're almost 1,000 homes less, and that's impacting the value of homes because the value of homes are starting to go up. We're starting to slide into a seller's market. We had been kind of buyers oriented, and now we're moving into a seller's oriented market.
Well, and that's interesting you say that. I was going to ask you that question as well, Jack, because when I do a pre-approval for a client, for example, they go out shopping for a house with that number. What I've seemed to notice lately is it seems like there's multiple offers coming in on almost every house that my clients will make an offer on. Yeah. Is it pretty prevalent now to see the multiple offers?
Especially for homes that are new on the market that are well priced. And what I mean by that is that the agent and the seller have gotten together and have put a value on the home. That's really where the market's at. They've really looked at where the market is. And if they've done that, you were seeing in one case we had one house that had over a dozen offers on it.
Wow. Yeah.
So
that's definitely a different market than a year and a half ago.
Well, and exactly, and certainly on our listings we're seeing a lot of that. I would say on more than half of our listings probably we're seeing multiple offers, and then even when I'm going around with buyers, again, as you just mentioned, if it's new on the market, I tell people we need to make sure that we're already pre-approved because we need to get that offer with the pre-approval letter to the seller immediately because I anticipate that we will get multiple offers, and certainly the ones that I've been showing people, if we don't act quickly, I see that they are, definitely turning, and going under contract that quickly. So,
well, and the pre-approval seems to really help the confidence of the buyer as well. Once they know, okay, here's what my numbers are going to look like. They are able to really make some confident offers, and they don't really sit on the fence as much, it seems. So.
Well, I was going to say, too, the other thing about getting a pre-approval is that way the buyer knows about how much house they can afford. I mean,
Exactly.
It's great, if they can spend, I'll say, $1,500 a month, but you have to think about a rainy day fund. So,
Exactly.
$1,300 may be the cap where they really need to be. So that's a good thing. And I try to, I know Tom does too, try to make sure that people know, how much house they really want to spend.
Yeah, and that's one of the pieces of when you sit with us and talk with us. We're going to we'll tell you what your maximum amount that you can approve for, but that doesn't necessarily what you want. Mm-hmm. It's really going to be your comfort level on what you want to spend per month, and we'll definitely drill into that and make sure you're comfortable.
Yeah,
Absolutely.
People don't need to get house poor. That's why there were so many foreclosures. People got carried away, just took as much.
Certainly.
Well, and certainly I don't think that the lender is out to put somebody in more house than they can comfortably afford. But there are a lot of people that love their $200 a month cable and their fancy car that's $400 a month or whatever else. And that's just it. Is if you're going to have all those other items that are on the higher end on a monthly basis, then you probably do want to rein in your mortgage payment. And that's just it. Is talking to somebody like Cameron, they will kind of help you figure out what's going to really fit your budget of what you're looking for. They're not going to try and put you in more home than you can afford.
Exactly. We definitely like the holistic approach and really look at every aspect of the purchase. I mean, obviously the buyer's in control, and if I can pre-approve them for a maximum and that's what they want, then we're gonna try to get it done for them. But at the same time, we want to at least advise them. Okay, well, let's look at these options. Here's your payments, excuse me, and here's your rate. So. Yeah, I mean, it's a great opportunity just for not only getting pre-approved, but just to talk about your whole financial picture and see kind of where you want to go forward.
Exactly, and you ask those types of questions of what other monthly expenses do you have on an ongoing basis, so that way you can help them get the full picture there. So I think that. And actually, one other thing that I was going to mention real quick too is what is the cost to get pre-approved?
It's absolutely free.
That's my favorite price.
Yes, it's a great price.
Everybody likes free.
Free is good, and that's one of the reasons it is so easy to jump in and sit with us. We can get it done within 30 to 45 minutes and face to face, even 20 minutes over the phone, and it gives you, like I said, the confidence to know where you're going to shop.
And a lot of times too, it makes good sense for the buyer to get pre-approved because if you start off going out looking at houses, you start seeing something that you can't afford, and everything that you try to compare to that once you do find out from Cameron what you can afford, you're always comparing it to the house that is out of your price range. So that
well, and you guys may see the same, but it's interesting. As soon as someone comes and talks with me, how many people that they know or family members have been experts in mortgage or real estate until they find out the facts when they sit down with either you or me. And that's another thing we can do is answer a lot of questions. There's a lot of information out there on the internet, some of which is very helpful, some of which is a little off base. So sitting with an expert, sitting with a professional is going to really answer your questions and get you in the right direction.
One of the other things, too, is a lot of people start looking online, and they start looking online for online lenders. And one of the things that we've seen, at least I know Tom and I have seen, is when people work with an out-of-town or an out-of-state lender that they've picked up online, we've seen deals get all the way up to the closing table, and Cameron and Alpha Mortgage have bailed us out, right, or bailed our clients out.
Exactly.
Because all of a sudden they find out that they can't do the deal.
Well, and the somewhat sad part about that is that even if they can help save us towards the end of the deal or whatever, they can't save us on the day of closing. You really need to, because there are federal laws that are designed to protect consumers, that you have like 10 days that, you have to work with. So, they certainly kind of, comparatively, to an internet-based company can help out. But, it is going to push it back a little bit, to go with them or anybody else, at the last minute. So it's better just to go with the right company to begin with, instead of, starting off with the wrong foot. And one other thing that I'll mention too is a lot of those companies, have a teaser rate, that, is, talking about origination points or discount points or whatever else that's kind of in the fine print there. And I know that when you're working with, folks like, Cameron at Alpha Mortgage, they're going to quote you, kind of the no points price, whatever, to give you the best apples to apples comparison.
Exactly. Yeah, we're going to look at all the options, and being in the town that you're buying in the house too. If you're looking in Wilmington, I mean, we're going to be here. Mm-hmm. We're not going to be a one and done. We want you as a client. We want to be able to talk to you and your friends 3 to 4 years down the road, 5
relatives,
years,
right.
Relatives, everybody. We're here, and so it's important to us to really drill into what's good and best for you. Interest rates always sound really sparkly and shiny when you see them somewhere, and interest rates, although very important, may not be the most important in the transaction. So you want to look at the holistic picture again and, see what we can do to help you.
And if something, it says on there that it has 1 point or something, if somebody's looking online, what would that typically relate to?
Points are usually a percentage of the loan amount. So if you were doing a $200,000 loan and there was 1 point, then that's $2,000 in closing costs that's added to your transaction.
Okay, so 1 point sounds innocuous, but $2,000 up front
exactly.
Can add up quickly.
Can get pretty expensive.
So if anybody's got any questions for us here at the studio, give us a call at 332-6390. That's 332-6390. Or if you want to talk to one of our teammates, you can reach us at 910-541-1212. That's 910-541-1212.
And I am also on the Team Gale Facebook page right now, so if you're bashful and don't want to be on the air, but you do have a question, we can take your question that way.
Yeah, we always love to hear from our listening audience. But, going back to things, what about loosening of bank guidelines? I mean, that's one of the things that I know has tightened up over the last 2 years for sure, and definitely getting tighter in the last 12 months.
Well, and I haven't seen a tremendous amount of loosening, but what we have noticed is the changes that we're tightening each time have reduced considerably. So I think we've maybe hit a pretty stable foundation, which is what we've been looking for, just a footing, so we know exactly what to expect. And usually, obviously, it's like a pendulum, so it was so loose in 2005, it's gotten so tight. And I imagine we're going to loosen back up again, but hopefully never to the levels of 2005. But the good news is now that we know, we're kind of finding a stronger footing, so we can give good advice and know that those rules will be there tomorrow as well.
What about credit scores? I mean, what are we seeing in credit scores these days?
For Alpha Mortgage, the minimum credit score is a 640. And then once you get to the 680 and above, it changes. It opens up your realm of lendability. Government loans below 680, and sometimes above, depending on your scenario. But anything above 680, we can look at conventional loans, conventional financing.
One of the things that we found working with Alpha Mortgage, which I don't think anybody else in town has, is they've got somebody that they're not credit repair specialists, but they have somebody on staff that can actually help, with somebody that's got some issues and some minor challenges with their credit score.
Exactly, and she's a credit analyst, and what she can do is a lot of times you'll find, and people unfortunately will pull their credit and they hadn't seen it in a year or two, and there's some things on there that weren't either necessarily true or were cleared up and not fixed. She can take a look at that and say, okay, here's the areas that we think are errors or misreportings, and help you or help us get your score to where it really should be. And once it's there, we can go to a lendable level.
Yeah, and that's and we've worked with Cameron and the folks at Alpha, with a number of our clients to help get their credit where it needs to be, so they're in a position to buy. And in some cases, really, it's minor things. We just closed the deal a couple of weeks ago where we had a couple of minor glitches.
Exactly.
And how long did it take? 2 weeks.
2 weeks, got it fixed, and got them in the house they deserve.
Yep.
Well, and I think that goes back to what you were talking about a little bit earlier, in the fact that you want to look at the whole approach, and you also want them to be a long-term client. It's not a one transaction deal. So the fact that you guys are investing that extra time in them is because you want to be their partner, long term. Yeah,
it's not about being able to close the deal tomorrow. It's about, can we close this deal? I mean, is it something that makes sense? And we've had clients that we've worked with for 2 years and then got into an area where they were ready to go, and we closed the house for them. And I'll tell you, it's like they're a friend for life. And that's because it's important. These are huge purchases, and it's important for families, and we see that, and we want to be a part of it.
One of the other things that we've seen too is, with these online lenders, is they're basically paid by the number of transactions that they do.
Exactly.
They're basically salaried. For every deal that they do, they get X amount of money, regardless of whether the deal closes or not. They get it from just processing it. So.
Wow. Okay. I didn't even know that.
Yeah. Oh yeah. It's kind of interesting.
Yeah.
But anyway, just some additional stats for everybody. Going back to 2012, looking January to June and January to June for 2013, and this is generally in the area. This is just overall Pender, Onslow, New Hanover, Brunswick. Home values have gone up about $13,000 in the past year. This is just on average.
Wow.
And median sale prices went from $169 last year to $178 this year. So, that's huge. And then the other thing that's happened is the days on the market, which goes back to what we were talking about before, with, switching over to more of a seller's market. Days on market went down from 155 to 136, although that doesn't sound like much.
That's pretty big.
That's pretty significant. So, that's something, I don't know. What do you see, Tom?
Yeah, I was actually pulling up the stats for the 5-year because I think that's going to show even more drastic. I know that, yeah, exactly. We were just over 5,000 5 years ago properties for sale, and now we're at half that. We're at 2,500. So that, I think, is an indicator of increasing demand and therefore decreasing supply. When you have, the shift there, when you have more buyers and sellers, that is what starts to make the pricing go up. So inverse relationship between the inventory of homes going down and the pricing going up there. But yeah, I mean, half as many homes for sale now as 5 years ago. It's pretty drastic.
That's pretty good. And that, again, goes back to the interest rates and the strength of the economy. So.
Yeah, we and I know Cameron was in our sales meeting this past Tuesday. We have a weekly sales meeting where the company goes over, where the market's at. And Coldwell Banker Seacoast has over 350 agents, and we were seeing and just talking about, the how strong the market is and what we're seeing. And over this entire year, we're up. I think the company's up about 12.5%, 15%, in terms of volume as well as dollars.
Yeah, it's incredible. It's great signs.
Yeah. But anyway, going back to cost of waiting, again, not to belabor the point, we're in a market where things are changing rapidly. We're getting into a position where if you are thinking about buying a home, get yourself pre-qualified, hook up with a good realtor. Hopefully, you'll hook up with Team Gale or somebody at Coldwell Banker and work with the best in the market.
Well, and not only buyers but sellers. I mean, if you have been holding on to your house, waiting for the market to turn around, give us a call. I mean, we would be happy to tell you if we think that you can get the price that you've been hoping to get. And again, there's no cost or obligation to talk to us as well. Just give our Team Duty agent a call at 541-1212, and we'll be happy to come out to your house and meet with you in person to discuss that option.
Right, and give you a free market analysis and evaluation of your property. Yeah, because I mean the market is changing. And this
quickly.
Yes, yeah. And for sellers, we're not where we were when the market was real hot back in 2007 or 2008, and we're back to a normal, I would say, a normal increase in price value.
Well, and you've also had, I think that this year has been a little bit, or I kind of hope, frankly, it's been a little bit atypical. I'm not at all surprised that we've had this big jump in demand for homes this year because you've had 3 years of people that have been able to buy but holding off, waiting for the bottom. So you have that pent up demand. So you have 3 years of people buying homes that are all buying them in the same 6 months. So exactly. I mean, it's kind of been a jump, and I tend to think it'll taper off a little bit here. But I think that in general the economy is improving. So we're going in the right direction. And I think overall, although it might not be as drastic as we've seen in the past 3 months, pricing and interest rates will continue to tick up.
Yeah. So anyway, we're getting close to the end of the show. Just want to mention, if you have any real estate questions, you can reach Team Gale agent at 910-541-1212. That's 910-541-1212. Contact Alpha Mortgage at
910-256-8999.
And also, if you have any questions or ideas for future topics on our show, feel free to visit our Team Gale Facebook page. We'd love to hear from you anytime.
Yeah, and that's something that we want to do. I mean, we're here, in the studio for you every week, trying to provide information that you may otherwise not be aware of, and we want to help you with any of your real estate questions. So please give us a call, or as Tom said, contact us via Facebook, or you can go online at on our website and select information that you want to get. And you can reach us at www.teamgale, that's TEAMGALE.net.
And it's called Your Home with Team Gale for a reason. It is your show, so feel free to visit with us anytime. Thanks.
Thanks so much, guys.
Have a great week. Thank you for listening.